Okay, guys, let's do a recap here. Recap on the LG2. So the first video we did today was we looked for this V bottom. So what happened was we went from a chop market into a trend market. It was red, green, chop, and then it went right into a big trend market. So replay the live trade we did here this morning. I walked everybody through it before this trade even happened. So this was an LG2 entry. What you want to do is when our dual trend filter will dictate the trend of the market. If we are green, green, we're simply going to look for a liquidity grab to buy. What that means is if you replay the last video that we just did today on 2/5/2025, there was a distortion in price. There's a V bottom first that happened here that closed. Said on the microphone, this is where you can turn the liquidity grab trader on. There's a distortion in price that occurred here at this level. That's when they pulled it back, took all the counter trend traders out of the market. I said if it closed back above this 40 level, the liquidity grab trader 2 would go long. It sure did. 40.25 fill, got as high as 46.5. Okay, I said the buy stops be resting just above this high. It should drive price higher relatively quickly once you break through that high. It did. Once it broke 42.25, I said that's where the resting buy stop should be to catch these counter trend traders that are counter trend trading the market. It drove price right to our targets. It was beautiful. We get the retracement coming in here on live on the microphone this morning. I said the resting buy stops will be above this high. If it breaks 46.25, I told the members in the room, I said we should drive to 51 because that's where our next gap is on market profile. 50.75, 51 is right here. I said if we get another liquidity grab, your target's going to be from here to 51. That's our next drive in the market. And right when you get long the liquidity grab, if once we get through these buy stops as high, these buy stops going to start getting hit because all the amateur traders like to buy, they like to sell the high, trying to catch a Fibonacci level, a pivot level, all this garbage out there. We know that's not how order flow works. We want to prey on the counter trend traders because all these algorithms that are counter trend trading the market, they're going to have resting buy stops above these highs. So right when it breaks through these highs and we're long with the LG2 already, it's a self-generating trade. It should drive price. Broke through this high. That's when we had a Momo came up, drove price. Broke through this high, Momo came up, drove price, right? That's when these yellow candles are going to come up when it's driving price through previous highs. That's why these yellow candles fire right there. So that's when the buy stops start hitting. So the beautiful thing about this one, so we started retracing on the second candle. Okay. I said possible LG2 on deck, liquidity grab on deck. Why? Because as we reverse priced, we had a V bottom that came in place right here. V bottom comes in. Now the V bottom is in place. You can turn the liquidity grab trader 2 on because the liquidity grab trader catches the first liquidity grab after a trend change. After a retracement, sorry. And a V bottom takes place. So you wait for the V bottom to take place, turn the LG2 on, and this is where it got in on the LG2. This is where I got in on the LG2. Price drives itself. All right. This was the high. Would have been a 43.75 fill. That's a beautiful thing about the liquidity grab trader. The fills are great. They're fast. It puts your stop in for you. It takes the emotion out of the trade. It puts your targets in for you. So you got your stop. Stop in place. Gets long 43.75. Drives as high as 52 on that first push. 52, 43.75 to 52. My target's 51 in the gap. Drove right to it. Right? We have this opening gap already. We already knew that based upon the market profile gap. So this possible LG2 on deck, it's solidified. and turned into an LG2 after a V bottom. So V bottom comes in, turn the LG2 on. There's your V bottom. V bottom comes in. LG2 goes long, strategy goes long, takes the emotion out of the trade. Now you got the emotion out of the trade. Your stops are in, your targets are in. Emotion is totally removed from the market. Here's our LG2 that fired. I'll show you in a second. Here's your LG2 that fired. Then the market takes off again. I said if we break through the 51 level, we're going to have another possible V bottom because we had another big giant gap above us, which we do. We have another big giant gap. We're looking for another V bottom coming up again. Market retraces, red candles. The beautiful thing about this trade is this is called a sweet spot V bottom. Why? Because if you stay above my inner dots, that means it's a shallow retracement. They're looking to drive price. What do? V bottom takes place. We know the resting buy stops will be just above this high, catching the rolling position traders short to drive price. That's why that yellow candle formed. V bottom comes in. Once V bottom comes in, the LG2 gets long. LG2 got long right after that, the V bottom. It's holding above my inner structure dots, which is great. There's your V bottom. Now we're looking for another retracement, another V bottom on deck, unless we break into our outer line in the sand, which is 60, 41 3/4. There's your another LG2. There's your LG2 right there for another drive. All right, so when you're doing these and looking for these LG2 longs, you can turn the liquidity grab trader on right after the V bottom takes place. So when you're running an LG2 strategy, as soon as that V bottom takes place, V bottom, as soon as that V bottom takes place, V bottom comes in. It's going to take the first distortion of price. Now play that first video we just did. The first video, there is a distortion in price, and then the liquidity grab pulled in. This had a larger runner in it, so it was still long. It won't take another trade if you're still long. There's the first distortion in price. Got long if you had shorter targets. Got long at 43 3/4. Next V bottom comes in. So here's your V bottom here. V bottom. First distortion in price grabs liquidity. LG2 goes long. There's the next V bottom. Distortion in price right there on this candle, and then it drove price higher again. So we're 3 for 3 this morning on liquidity grabs, and we're all with trend. We're not counter trend trading the market. Now the great thing about this setup is this: as long as I don't break the line in the sand right here, this is my outer zone we tested for 30 years, being the best zone to reverse price in the S&P. As long as I don't break 60, 41 3/4 on a closing basis by 2 candles, you're looking for the next V bottom. Now you're not going to have any resting buy stops until you break this level up here. You're not going to get a lot of resting buy stops until we break 55 3/4. But it still will be another V bottom, possible LG2 entry. If we break 60, 41 3/4, that's when you're going to see this dual trend filter not agree. And that's when we'll have a trend change in the market. But that's how we do it. Play the first video. This is a recap of the liquidity grabs. We were dead on this morning. All 3. It was 3 for 3 this morning off of liquidity grabs. We talked about them way before they happened. This is a leading indicator. You just want to stick with overall trend. If we're green, use the LG2. I updated the PDF on the members download page. Tells you exactly how to do this. I go over and over and over and over and over it again, chart after chart after chart. We have a really extensive PDF that goes over all these different it goes over LG2 and LG1 trades, when to pull it, when to look for it. It's over a 90-page PDF that has tons of these examples. When to turn it on, when to turn it off, and let it manage the positions. These are where the buy stops are going to get hit. Talked about this morning before it occurred. Talked about this V bottom before it occurred. Talked about this V bottom, LG2 entry before it occurred. Buy stops will be right above these highs. Buy stops, buy stops. Now the next resting buy stop will be here to drive price. So price is going to get to my next opening gap. There it is. Now if I look at my market profile, this was projected this morning, guys. I projected this run to happen. We got above high value area. I said the target's going to be 51. Where did I get that 51 from? My previous market profile. We don't use 30-minute market profiles. We use my 2 to 4 hour rolling profiles. They're great for opening gap targets. Big target right there at 51. So when we were going long on our first liquidity grab at 42, our target was 51. We have a 10-point upside. Just like the next liquidity grab, if we get above and stay above this price on the next liquidity grab above 51, we got a big opening gap to 74. That's not my opinion. That's all the market participants in the market. These are magnets in the market. They drive price to them. So what we like to do is we like to see these big gaps in the market get above our daily HVA and go from a balanced market. And once we get outside of a balanced market, which we did, I said we're in an imbalanced market. This market could drive to 51 this morning. That's not I'm just not guessing. I'm just not winging it. That's market participation. It told me all the market participation was at 51. 51 was here, right there, target. So when we get the first liquidity grab driving price out of the daily HVA, where's it going to try to go to? When it fills at that 42 3/4, it's going to try to drive to that 51. Now, if I close 2 candles below this line in the sand at 41 3/4 here, you're going to see this red dot pop up on my dual trend filter. That tells me one thing. Stop taking liquidity grab longs. We're in a possible trend change. If it's a trend change, I'll wait till we turn red, and then I'll look for the first liquidity grab short and turn the LG2 on. Right there, red. Now we're in chop market. Now we're in chop. Now we're chop. Red, green. Once I turn red, just like this, check this out. And I talked about this in the video before this even happened. Here's the beauty thing about this software. When you know how to trade it, it's the same setups every single day. When I was red-green yesterday, let's take a look at it. I went over this in the first video. I'll recap it real quick. It was red-green. Software did not agree. The trend filter, red-green means we're chop. As soon as it turned green yesterday, I posted in the room, in the live room. I said the first V bottom after chop into trend. Sure enough, LG2 buy was 60.57 1/4. It drove 10 points on the software. Replay the first video. We go over that. I said this is the exact same scenario that we're in here this morning. Exactly the same. Exactly the same. I said we're in chop right here, red, green. I said when it turns green, which it did, now we're in trend. I said now we're in trend right here and up. What do you want to do? Look for the first liquidity grab buy right when it turns a V bottom, turn the software on. Nailed it. Again, next retracement. So look for the next LG2 buy, turn it on after the V bottom, nailed it. Third one, nailed it. Now, where are we in? We're in a chop market. So right when it turns red, what are we going to do? Wait for now, not a V bottom. We're going to wait for a V top. Once a V top comes in, the sell stops will now be below this low. Now we're going to catch the rolling positions on the other side of the market. Wherever the counter trend traders are, we're the opposite. When they're buying, we're selling. We're selling, they're buying. All these indicators are out there that are for free. They're conditioned for you to do one thing. To buy low and sell high, or sell high, buy low, and that's why they keep getting run over, traders, because they keep counter trend trading the market. The sell stops will be below this low. We're going to prey on the counter trend traders, all these indicators again. The sell stops will be below this low. So what we want to see a V top right here. Right now it's green, red. We're going to chop. Now we're chop. Sell stops to be below this low. Right when I start turning red, we got news came out. That's why it's a little fast here right now. Still in chop. Right when it turns green, red, we're going to go back to work. News just released here at 10 o'clock. Right when it gets released, gives us a green, or red. If it's green, we'll look for the first V bottom, turn liquidity graph trader on. If it's red, right now it's red, green, it's chop. This is chop. We're in a chop market. Let it get green, or red, and then you can turn the software on and go to work and take the emotion out of the trade. Don't make it any more difficult than that.